Hi there, welcome to Kneppy Invest. Bit of fun in today's video. Yesterday, on the May the 7th, I released a technical update featuring PepsiCo. And when I looked at the chart for PepsiCo, it was pretty obvious that an investment in PepsiCo, say 35 years ago, would have been a great investment. And then during that video, I just had the idea of comparing PepsiCo as an investment to Coca-Cola as an investment, because back in 1988, Warren Buffett made a significant investment in Coca-Cola, and he's been lauded ever since about that investment. And I just want to compare the two investments since 1988 to see whether he made the right choice. Now, for those who don't know, Warren Buffett is a pretty big Coca-Cola drinker. In fact, it said he drinks about 5 cans of Coke. Cherry Coke, I think, is his favorite flavor a day. Now, he wasn't always a Coca-Cola drinker. In fact, he was a Pepsi drinker. He favored Pepsi until Cherry Coke came out. Forget where that was, mid-1980s. And then he switched allegiances, and now he's a Coca-Cola drinker. And just like me, I think his favorite beverage is soda drink, Coca-Cola. My favorite drink is Pepsi Max. So I just want to compare these two companies, and yes, I will do a taste test. In fact, that's the first thing I will do. But first, let's start with the taste test. Now, this is a little bit of bias coming into my decision making here, because I do favor Pepsi Max over Coca-Cola non-sugar, whatever it's called. And the only time I will drink Coca-Cola is when there's no other alternative. That means they don't sell, the restaurant or wherever it is doesn't sell Pepsi Max, because I do prefer that drink. But we all have our preferences, and I know that Coca-Cola is generally preferred over Pepsi. I just lean the other way. So I put some of Coca-Cola and Pepsi Max into different glasses. So here is the Coca-Cola. So I'll take a drink of this. Now, I can't remember the last time I had a drink of this. Actually, it wasn't that long ago, but maybe I'll have a sip of this drink maybe twice or maybe 3 times a year, not that often. And to be fair with you, it's okay. I'm not spitting it out in disgust. It's okay. It's a nice alternative when my preference is not available. And again, I'm not sure if I mentioned this, I don't actually like the sugar versions of both of these drinks. I do try them on occasion, and each time I do try them, I just went, nah, I just don't like them. So for some reason, I don't like sugar in my soft drink. Now onto Pepsi Max, and I know straight away I'm going to like this because I have Pepsi Max every day. I don't think I drink as much Pepsi Max as Warren Buffett drinks Coca-Cola, and I can tell you right now, his dentists and my dentist are loving the fact that we're drinking so much soft drink, because soft drink is quite acidic and it's very harmful for your teeth. I'm trying to find ways around that. For instance, when I typically do drink a soft drink, I will have some water afterwards, and I don't try to sip Pepsi Max all through the day. So that's sort of something I'm trying to change right now. But anyway, yep, I just simply prefer that over Coca-Cola. So first victory to PepsiCo in regards to taste test. Now, of course, this will never come up when I am making an investment decision. I will never look at my own personal preferences in a decision I make, because my personal preferences can be completely different than the overall market. But for these purposes, for this video, PepsiCo has one victory over Coca-Cola. Next thing I'm going to look at and compare these two companies is the diversification. And this is something new to me, because even though I do know Coca-Cola is a little bit more than just Coca-Cola, and PepsiCo is a little bit more than Pepsi, just how much more they are actually did surprise me. For instance, Coca-Cola is a total beverage company. In fact, I didn't know that. They just sell beverages. That's it. no snacks, no chips, that sort of thing, which is a little bit different than PepsiCo, and we'll see that in the next slide. They offer more than 200 brands from sodas, waters, coffee, teas, juices, that sort of thing, and a growing list of flavored alcohol. And they sell these beverages in more than 200 plus countries and territories. I'm pretty sure there's only 197 countries in the world, something like that. So obviously there are way more territories. Some of their brands they do sell in Australia. Well, I think some of these are in Australia. Include Pump, which I'm pretty sure is water, Fuse Tea, Cascade, Powerade, and something I didn't know. My favorite chocolate milk that you can buy in the supermarket or at a store, Barista Brothers. So that is something new I have learned just preparing for this video. PepsiCo is a little bit more diversified, and to be honest with you, I would prefer a company that is more diversified. And not only does PepsiCo sell beverages, for instance, 7-Up, Pepsi, Mountain Dew, Lipton Tea, Tropicana juices, Gatorade. There's one here have never heard of. So all these products are American products, but they also sell a lot of chips. Sun Chips, never heard of that. Lay's, Cheetos, Doritos. They also sell Quaker Oats. Pretty sure that is sold in Australia. I can't remember. But what I found surprising in the way of chips they sell in Australia, they own Smiths. I did not know that. And Smiths owns Burger Ins, which is my favorite type of chips. And they also own Red Rock Deli, which was a little bit of a surprise to me. So you can see PepsiCo is a little bit more diversified than Coca-Cola in terms of the product. So PepsiCo is really into snacks and also beverages. So when you are going on that long road trip, there is a greater chance that you'll be buying PepsiCo products over Coca-Cola products unless you're buying quite a few of Coca-Cola drinks. So when it comes to diversification, which is important for me, another victory for Pepsi. So right now, PepsiCo is 2-0 up on Coca-Cola. When I am researching a company, one of the first things I look at is revenue per share growth. I want to see the revenue for a company growing through time. If I don't see revenue per share growing through time, that's an immediate red flag and a likelihood that a company is not the sort of company I want to invest in, particularly for the long term. More than likely, it's going to be a low quality company that you're only going to trade. So this is the annual revenue per share growth of Coca-Cola and Pepsi since 1993. That's how far back I could go in Guru Focus. And the main things I'm looking for here is I want to see generally a positive growth in revenue per share. Ideally, I want to see at least 10% per year. Now, I probably wouldn't classify these two companies as completely mature companies, but they are definitely big cap companies. We're talking about $100 billion, something like that. And for these type of companies, it's harder to grow at 10% per year. So we are looking at the median here. And for Coca-Cola, over the past 30 years, the median revenue per share growth is 5.5%, while for PepsiCo, it's 8.4%. And just as importantly, if we look back during the past 20 years, PepsiCo generally has grown their revenue per share. In fact, there was only 1 year here, 2016, where they had negative revenue per share growth. And that is favorable when compared to Coca-Cola, because over the past 20 years, we have seen numerous years where Coca-Cola has seen negative revenue per share growth. In fact, about 1, 2, 3, 4, 5, 6, maybe 7 years where they have seen negative revenue per share growth. And generally, you can see a little bit more consistency when it comes to PepsiCo's revenue per share growth, a little bit more volatility when it comes to Coca-Cola. So on revenue per share growth, I've got to give the victory to PepsiCo yet again, which means it is now 3 up on Coca-Cola. Another thought I had was, did Warren Buffett make the right decision buying Coca-Cola? Would he have made an alternate decision in buying PepsiCo in 1988? And would it have been a better investment? So I am comparing total returns of both of these companies since 1988. Now, I did a little bit of research trying to find out exactly when Warren Buffett bought shares in Coca-Cola during 1988. A few different sites said he bought shares during 1988. They weren't specifying a time, which is understandable because sometimes we just don't know exactly when these fund managers would exactly buy shares. So what I did is just go back 35 years to May the 2nd, 1988, and just assumed you could have bought $10,000 in each of these companies and then reinvested the dividends in each of these companies. And how much would that original investment be worth now? So current value. So original value 10,000. What's the current value? And then also look at the compound annual growth rate by reinvesting the dividends, and then also look at the compound annual growth rate if you didn't reinvest the dividends, if you just spent the dividends on something else or had no dividends at all. So that's just looking at share price appreciation. So I just had a little bit of a burp because of the drinks I had earlier. Anyway, so Coca-Cola, if you bought $10,000 in that company on May 2nd, 1988, the value of that $10,000, if you reinvested dividends, is now worth $601,000. That's a nice return over a 35-year period. In fact, it's 12.4% per year return, which is the sort of returns you do want. It's beating the market returns, which is exactly what we are aiming for when we invest in individual companies. Now, for PepsiCo, if you put $10,000 in PepsiCo on May the 2nd, 1988, that $10,000 is now worth $753,000, which is $150,000 more than Coca-Cola. So in fact, PepsiCo would have been the better investment on May the 2nd, 1988. If you look at the compound annual growth rate, it's only 12.9%. So not that much higher than Coca-Cola. It just shows you the importance of getting the most out of your investments. So that's one of the reasons why a lot of investors try to buy individual stocks to beat the market, because you can get significant better returns if you are getting better overall returns in your portfolio. And you can just see that when comparing Coca-Cola to Pepsi, only a 0.5% difference in the compound annual growth rate, yet the current value is $150,000 different. Now, if there was no difference, so just looking at the share price appreciation, Coca-Cola has grown, share price has grown at 9.9% per year, while PepsiCo has grown at 10.5% per year. So comparing Coca-Cola to PepsiCo, unfortunately for Coca-Cola, this is another victory for PepsiCo. So we're now 4-0 up. Now, that was over the last 35 years. Typically, when I am researching companies, I focus on the last 10 years. And the things I personally look for are revenue growth over the last 10, 5, 3 years. Also look at the trailing 12 months, but I haven't included that in this particular slide. Also look on return on invested capital, return on equity, not only currently, but also the last 10 years. And if I see some discrepancy between what it is now compared to the last 10 years, I will take note of that. Also look at valuation metrics. In this instance, I'm looking at EV to EBIT. And then I'm also looking at total return of the company over the last 10 years. This includes share price performance plus dividends. So let's have a look at both of these companies. And a couple of surprises here. The first surprise is that the revenue per share growth, I should mention the revenue growth is revenue per share growth. The revenue per share growth of Coca-Cola is actually negative over the last 10 years, negative 2.1%. Well, for PepsiCo, it's actually fairly low too, only 3.6%. But over the last 5 and 3 years, we have seen growth for both of these companies in terms of revenue per share. In fact, the last 3 years, Coca-Cola has grown at 8.4% per year, PepsiCo at 9.3%. But just on revenue per share growth, PepsiCo is the winner. On return on invested capital, fairly similar for both companies. Right now at 12.9 for Coca-Cola, 12.8 for Pepsi. And funnily enough, when you compare the returns over the last 35 years, fairly similar to the current return on invested capital. And generally, the return on invested capital for both companies is above 10 over the past 10 to say 35 years. And that's the number I am looking for when it comes to return on invested capital. I want to see that number above 10 and be consistently above 10, because if it is consistently above 10, that means there's a greater chance your return on that investment is going to be greater than 10% per year. Now onto the valuation metrics. Now this could be a little bit misleading. I'll talk about this later in the video. For Coca-Cola, it's 22.8. For PepsiCo, 34.1. So just based off these two numbers, you might be able to argue that Coca-Cola is better valued right now than Pepsi. But look at the total return over the past 10 years. For Coca-Cola, 7.6% per year, which might be underperforming the market. Well, PepsiCo is 12.1% per year, which is slightly beating the market. So in terms of total return, again, another victory for PepsiCo over Coca-Cola. The only things that would probably lead me to sway towards Coca-Cola is just a slightly better return on invested capital number, but it's slight. And also the valuation, EV to EBIT, might be in Coca-Cola's favor here. But generally, I have to give another victory to PepsiCo on this matter. So that means PepsiCo is now 5-0 up on Coca-Cola. Now, when it comes to high-quality companies, I'm not totally convinced that both of these companies are high quality, but I think they're close enough. And when it comes to high quality companies, it's all about value. I do treat high quality companies a little bit different than low quality companies. And for high quality companies, it's a question about whether I see any value in the company. And one way is to see whether there's any value in the company is just compare a valuation metric now to the historical ranges. Now, this is not complete. It's sort of an incomplete, but it does give an idea of whether the value of the company now is cheap or expensive compared to historical levels. So this is Coca-Cola's EV to EBIT over the past 30 years. Now, before the GFC, this company was highly thought of by the market because the EV to EBIT was quite high. In fact, it ranged between about 30 and as high as about 50 or just above 50 just before the GFC. But then the EV to EBIT went on a big nosedive. In fact, it fell from about 50 all the way down to a low of about 10, and that was in 2011. And then since that low in 2011, the EV to EBIT has slowly been climbing, although you might be able to argue the top since then was in 2017, and since then it's slowly been dropping. But if you compare the EV to EBIT right now, it's not on the high end. It's also not on the low end. So it's nowhere near 10, nowhere near 50. Even if you just compare the EV EBIT over the last 20 years since 2002, it's sort of in the mid-range between the high point, which is about 32, and the low point, which is about 10. So you might say just by looking at this that Coca-Cola right now is fairly valued. Now on to PepsiCo, doing exactly the same thing, looking at the EV to EBIT over the past 30 years. And the most striking thing when you look at this particular chart is the EV to EBIT for PepsiCo is at historical highs right now. And there is a reason behind that. So I'm just going to go back and look at the EV over the past 4 quarters. And I did notice that the EV, not EBIT, I should say, looking at the EBIT over the past 4 quarters, and it's somewhere here. Sorry, just bear with me for a second. So EBIT, now I'm looking at the annual numbers between 2008 and 2022, and typically EBIT has been rising 7.4 million in 2008 all the way through to 11.6 million in the last financial year. But the last 4 quarters is really interesting. We've gone 5.4 billion, 2.1 billion, 3.4 billion, 779 million, back to 2.7 billion. So that 779 million was in the December quarter, and it's a historical low number when it comes to quarterly numbers for PepsiCo, which means the trailing 12 months EBIT is fairly low. In fact, it's the lowest this company has seen since 2009. And I think that's a little bit misleading because of that one negative quarter. So I think the EV to EBIT is at the level it is now, say 34, is a little bit higher than you could argue. And that's why it seems excessively high compared to the history. So typically, the EV to EBIT for Pepsi rarely gets above 24. We saw 24 reached back in the 1990s, also in 2002. We also seen the EBIT as low as about 11, which was back in 1994, and also during the GFC. So the EV to EBIT for Pepsi right now is nowhere near 11, but I think saying or thinking it's really high compared to historical levels might be a little bit misleading, and you might think this company is significantly overvalued right now. I'm not going to go that far. won't say it's significantly overvalued, but I do think there's a little bit of a premium when it comes to PepsiCo valuation right now. So in terms of valuation, I am actually going to give the victory to Coca-Cola. So right now, PepsiCo is 5-1 up on Coca-Cola. Now, the last thing I want to do is just look at the charts, and fairly similar charts when we compare Coca-Cola to PepsiCo. So these are the monthly charts, and this is the log monthly chart. So you definitely want to look at the log monthly charts if you are going back 60 years, because if you don't log it, if that's the right terminology, you're going to see a fairly weird, not weird looking chart, but you'll see the start of the period, say the first 10 to 20 years, it's fairly flat. You won't see the significant rise in share price during that period, if that makes sense. So both of these charts are log charts. Typically, I will look at log charts if I'm looking at long time period, particularly if there's been significant share price appreciation or price appreciation. So when you look at Coca-Cola's monthly chart over the past 60 years, you'll notice it goes from the bottom left to the top right, but it's not a straight line. And there have been long periods of time when Coca-Cola share price has consolidated. The first period was between about 1973 and 1983, which is a 10-year period. Share price went sideways. And the second period was between about 1999, 2000, and 2010, when again, the share price went sideways. Now, couple of really good bull runs. The best bull run was just after, or just around the time, or just before Warren Buffett made an investment. So Warren Buffett made an investment in 1988. If you can see my mouse here, that was around there. So that was a few years into the start of the bull run. That bull run went from about 1982 all the way through to 2000. Share price actually went from about 64 cents to about $53. Now, there has been a few share splits for both of these companies. I do know PepsiCo has made 4 or 5 share splits since it listed on the Nasdaq. Now, Coca-Cola is listed on the New York Stock Exchange. I'm pretty sure PepsiCo is listed on the Nasdaq. So just when you look at this particular chart, there is periods when Coca-Cola share price goes sideways for 10-year periods. Now, right now, share price is increasing. It's in a uptrend, but not like the uptrend we saw between 1983 and 2000, but it's gradually climbing. In fact, since this uptrend started back in 2010, share price has increased from $24 to about 55 or $64. So it's more than doubled over the past 11 or 12 years. So let's have a look at the PepsiCo chart to see if there's any significant differences. And this particular monthly log chart goes back to when the company did list on the Nasdaq. Yeah, I was right, on the Nasdaq, which was back in 1960, about 68 or so. And just like Coca-Cola's chart, bottom left, top right. But the big difference, it's probably a subtle difference, you might argue, is that PepsiCo has had no period where the share price has consolidated for a 10-year period. And generally, the share price has been going up and up and up. The only difficulty, if you were a shareholder of this company, was way back in 1974, when the share price fell a fair bit. In fact, the share price fell from about $1.55 all the way down to about 54 cents. So in fact, the share price fell by 66% in that period of time, very short period of time. But ever since then, the share price has been on a tear, a beautiful uptrend over the past, we'll say, 50 years. So if you do compare the Coca-Cola chart to the PepsiCo chart, the one big difference was PepsiCo chart lacks those very long 10-year consolidation periods. We've seen that happen with Coca-Cola twice over the past, 60 years. So if I was going to score and compare both these charts, I'm going to have to give the victory to PepsiCo, which means overall, PepsiCo wins this challenge by 6-1. Now, would I invest in PepsiCo over Coca-Cola just because of this victory? Not necessarily so. I'm going to do a little bit more research, because what I've seen over the past 10 years in the performance of both of these companies actually would preclude me from taking an investment, because there are quite a few checkpoints that I want to see that both these companies don't satisfy. For instance, revenue growth over the past 10 years. Return on invested capital is pretty good. Valuation might not be satisfied right now, particularly when it comes to PepsiCo. So I was thinking maybe I should do a little bit more research on PepsiCo just to see if this is a viable investment for me right now. So at this point in time, I'm not an investor of either of these companies. And by doing a little bit of research on both of these companies, I'm probably not inclined to take an investment in either of these companies at this point in time. It might change, particularly if we see the share prices of both of these companies fall back a fair bit over the next few months. But in saying that, if you do look at the shorter term PepsiCo chart, it just keeps on going up, keeps on chugging higher. We have seen not a single significant depreciation in the share price since, I believe, the COVID-19 financial panic. As a victory salute to PepsiCo, I'm going to take another drink of Pepsi Max. Beautiful. So I did go for a run this morning, and typically when I go for a run, I'll drink some chocolate milk, which is currently, and people used to laugh at me when I said this, say 5 or 10 years ago, chocolate milk is one of the best drinks you can have after exercise. And then I have some water and also some Pepsi Max. So anyway, if you have any thoughts about this competition between PepsiCo and Coca-Cola, if you think differently than I do, and of course I'm a little bit biased, and I always wanted PepsiCo to win this competition today, just because I prefer Pepsi Max over any Coca-Cola drink. If you do have different thoughts, if you think I was being a little bit unfair on Coca-Cola, I'd love to hear your thoughts, your opinions, and even your questions. So leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.